Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for April 2nd, 2018. So, second quarter, we're beginning our first trading day of the second quarter, and let's take a look at these markets and see what we can determine from what we've got going here. First off, I want you to recognize that we have a bit of a morning star pattern here on this chart. I didn't mean all four of those candles to be circled. A morning star pattern consists of 3 candles. And that's a reversal type pattern. But we also have to recognize when we see the potential of that reversal pattern. And by the way, that reversal pattern is showing relatively close to that 200-day moving average here on the diamonds. If we take a look at that, we also have to recognize the fact that we are underneath significant levels of resistance. So we need to break through a bunch of resistance levels before we're really going to be in any kind of a bullish market. Let's also make note that we are downtrending. This downtrend still continues, and that downtrend has been confirmed because we have made that new low in the diamonds. So a lot of work to be done here. It is encouraging that we saw those bulls step in there. But as you know, if you take a look at the futures this morning, we're not looking too sharp this morning. Bears are kind of taking over. Right now, as I record this, we're looking at about a 120-point gap down this morning, just simply because all the political news out there. You probably have seen the news, but China has declared 120 some odd new tariffs on the United States as this trade war kind of heats up. So that uncertainty is going to make the market just a little bit shaky, and we're looking at a gap down this morning. If we take a look at the SPY is doing much the same thing, kind of that morning star pattern. And this one is actually a little bit better, if you ask me. And that's because we are actually bouncing off a price support level as well as that 200-day moving average, showing a little bit of strength there. But here again, we are still in that downtrend. Didn't quite make a new low. We tested that low, so this is possibly a double bottom here. But we also have to recognize the fact of the major levels of resistance above that we still have to deal with if we're going to turn this market positive. So it can be done. It can absolutely be done. We could get positive from here. And I will tell you that historically, April is a pretty good month for stocks. We tend to rally a lot in April. But we have to look at the chart for what it is and realize that there are some resistance levels and quite a little bit of ugliness that we still have to work through here before we kind of turn this market around. So I'm not all bearish in any way, shape, or form, but I would certainly be a little bit cautious and suggest anyone that's all bullish take a step back maybe and take a closer look at the chart, because there's no way you can look at these charts and just be simply bullish when you see all the resistance that we have here. Now the Qs, take a look at that. You can see the Qs didn't make it to its 200-day moving average, so it's kind of out here floating around. What can we look for? Where's our price support? Well, our price support comes in right through here. This price level clear over here seems to be trying to hold the market. Now this is in no way, shape, or form a morning star pattern. It did not hold up to that morning star pattern, and notice this failure at the 50-day moving average is fairly significant. It is entirely possible we could still see the Qs move lower if this rout in the techs continue. So kind of watch that closely, and also realize that we have levels of resistance now that we have to deal with. That 50-day moving average is a resistance, and all these price levels that we're going to have to deal with to get this back on the right side of positive. If we take a look at IWM was really the last to start breaking down, but we have that failure here at the 50-day moving average, failure of our little uptrend, and now these levels will serve as resistance, so we'll kind of have to keep an eye on that. It's not out of the question, absolutely not out of the question, that we could see the 200-day moving average on the IWM, on the Qs, and on the SPY, the Dow here before too long. So with those trade wars kind of creeping up here on us, and that political spin that is, one of the hardest things I think to trade is political spin. We can trade a market, we can trade economic details, we can see that in the price action. The problem with political spin is it can reverse so quickly in a well, as often as a politician can flip-flop, it can reverse, and that can be very, very difficult to trade, and dangerous, because in about half a heartbeat we can get a complete reversal in the market with just a simple report or a hint of a report. So political volatility is always difficult, and you'll want to, if you do trade or thinking about trading here, make sure you trade with the proper trade size for your tolerance for risk, and realize that you're going to have to stay very, very focused on the charts and watch for those quick potential reversal patterns. Let's take a look real quick at the VIX. Now the VIX dipped lower on Friday, which was nice. It's holding a bit of a pattern right here. We have this support level right here, and we have this resistance level right here. So what we've done is kind of build this little trading or consolidating box right in here on the VIX. Now that can pop either direction. We could pop higher or lower. I wouldn't want to try and predict either one. This morning we're probably going to be moving up with the market selling off a little bit here at the open, but then anything can change intraday. So this can go either direction. That means we're kind of in a 50-50 market right now. We could flip either direction very, very quickly. So keep that in mind as you plan your day, how you're going to plan your risk. Let's take a look at T21. 22. Now T21-22 4-week new high, new low ratio is actually suggesting that I need to change my chart. There we go. Is actually suggesting that we are up here toward that middle range. So here again, this is our bullish reversal zone down here. If we're trading down in this region, we would expect some bullish moves. If we're up in this region, we're expecting some bearish potential moves. And here we are kind of dead center in the middle. So here again, we're kind of in that situation where we could pop either direction, depending on how that news flow out of the DC spin cycle continues to come in. So watch that closely. Anything is possible here, and we need to be prepared for that today. Let's jump back here and take a quick look at the economic calendar today. We're going to kick off the second quarter this year with some pretty good sized reports. We have the PMI manufacturing index. That's expected to stay good. In fact, maybe tick just a little bit higher. It was flat last reading. ISM is also expected to remain very, very strong and look very good, and that's our biggest report of the day. And then construction spending is expected to bounce back a little bit. I think it was down or just a little bit flat on the last reading, so it's expected to bounce back just a little bit today according to consensus. Notice we have several bill or bond announcements today going on, and then we have one Fed speaker after the market closes today at 6 p.m. We also have a bunch of stragglers coming in here on earnings, still reporting fourth quarter earnings. There was about 130 on the calendar today expected to report, kind of straggling in here to kind of finish up that fourth quarter. We'll have about 2 or 3 weeks lull before we start second quarter earnings, and during that time we could see this market chop around a little bit. We may actually wait for the next round of earnings to get this market moving. I don't know. I'm not trying to predict that. I'm just trying to say that we could easily chop around here as this market tries to find some support, build a level of support, build a base where we can move up from or move down from. So kind of keep that in mind. We're in that little bit of a transitional period here where the market may be waiting on that next round of earnings to make a decision. We'll wait and see. So I'm expecting some choppy price action for the foreseeable future here, for the next few days at least, as we try to determine support and resistance in this market. So with that, folks, I want to wish you all a fantastic day. And if this is the first time you've seen this preparation video, I do this as part of my preparation every day, and I just happen to share it with everyone out there. If you find this useful, please do me a favor. Click on that subscribe button on YouTube and the follow me button on Facebook. And please, even if you're watching this on Facebook, subscribe to that YouTube channel, because that's where you're going to find this information first. It's always posted to YouTube first. So jump over there. You get the earliest watch of the video if you do subscribe to that button. Also, please click those thumbs up buttons. I really do appreciate it. Drop a comment, and always feel free to share this information with anyone. Take advantage of all the other free training on the YouTube channel. And if you have questions or things like that, I'm always happy to try and help. Everyone, take care. Have a great day. I'll talk to you all very, very soon, bright and early Tuesday morning. Have a good one.